Hello, traders. It is Friday, March 20th, quadruple witching. This is a big day. We can normally expect a lot of volatility, but we may have already seen that volatility earlier in the week. A lot of choppy trading. It does feel like a bid is starting to get established. So let's take a look at the market first. Then we're going to drill down to some stocks, see if there's anything that we should be trading. There's lots to be trading. First, we need to take a look at what the market is doing. So this is the action from yesterday. These are 5-minute charts. That is the entire day. You can see how the market rallied up. The one thing that I noticed yesterday that's been different from the last few weeks is that we did not see late day selling. In fact, we had a late day bid. This morning we had the market sell off. This is the early pattern that we've seen time and time again. So we had a nice drop here. The bid was checked, as I like to call it, and an instant rebound. This was very nice. We ended up buying lots of stocks in here with relative strength. You can see one of the searches that we use here. And I ended up going 11 wins, and I have 2 very small losses so far today. We're focusing on trading individual stocks with relative strength and relative weakness. I have preferred to stay on the long side. So as soon as I started to see the 10P indicator topping out right in here, I let everyone in the chat room know, folks, this is a time when you should be taking profits on your long positions. You should be trying to get back to a cash position. I don't know that it's time to short in here, but at least take your profits, get to cash. Let's see if this materializes into anything much. And then when we do get the market drop, we're going to be pounding on the top of this list to see which stocks want to run so that when market support establishes itself, we've got our shopping list. We know what we want to buy. And look at this. We got a 10P cross right here. So this is what I would call a marginal new low. We did make a new low of the day. Look at that long green candle. It came back and almost erased that entire red candle. Well, what does that mean? That means that there is some buying taking place here. Would I jump in and start buy, take everything on the... No. Have to be patient. We need to see a bottoming process here. We need to make sure that this is not going to turn into something more, that we're not going to have another leg lower. There's still lots of news out there that is scaring investors. That's going to continue. We've got the coronavirus spreading, but the news is not as dire as the media outlets are leading you to believe. And the reason for that is that we're getting test kits out nationwide. This virus has been around for a long time, and we need to establish the base. So people had not been tested previously. Now they're tested, and all of a sudden, hey, there are positive results coming in. Think about 7% is the rate that we're running. I think South Korea had a rate of about 6%, again, for the people who are tested. Obviously, they are showing symptoms. So this is not the entire population. This is a small segment of the population that's coming back with a 7% positive test result. Nonetheless, now that everyone's getting tested, yes, you do see the numbers starting to spike. I mentioned to you that was going to be happening for the next week or two. That is going to spark fear because everyone's going to associate that with, oh my God, the virus is spreading like crazy. No, it's not. Once we get that base established, then we'll be able to gauge the rate of increase for the coronavirus. Now, the reason that the market has been able to find support, I believe, is not because of all the fiscal spending that's taking place, all the monetary liquidity that's been put into the system. Those are essential, and we absolutely needed that. But that did not stop panic selling. What is starting to create a bid is the fact that we've got a drug, it's a cocktail, it's a combination of a very effective antibiotic called Z-Pak, readily available, and combining that with something called hydroxychloroquine. The two together in small samples and studies have shown 100% efficacy. Now, this is something that I knew in early February. China had already been using this, and there was a university in China that came up with this cocktail. That's what they've been using for their treatment. Why we haven't mass produced this, why it's not already being distributed ahead of time, that puzzles me. If I knew about it, everybody else knew about it. So a little bit discouraged by that, but also encouraged because I think this could be a game changer, and I've been talking about it all week. Hope is the missing element right now. People need to know that if they do stay put for the next 2 or 3 weeks, that there is treatment going to be available and that this will resolve itself. The economy will have a chance to get back on its feet, and this is not going to be something that's going to stall us out for the next 2 months where everyone has to stay off the streets and stay at home for 2 months. Boy, that is a really tall order. And there's no amount of fiscal stimulus or helicopter drops that's going to keep people pacified. That's going to spark a lot of fear if this dragged out for 2 months. I don't think it's going to. I think 2 or 3 weeks is going to do it. I think we're going to see the new corona cases start to taper off, at least as far as the growth rate. I think the treatment is going to be put out there as fast as possible. The FDA is trying to fast track all of this. So I'm a little bit more optimistic. I think that we're starting to see some signs of market support. I am starting to see some signs of a bid. This does not mean go out and start buying for your portfolio. It's go, go, go off to the races. No, we've got a lot of economic repercussions that are going to be taking place once the dust settles and once the virus is somewhat contained. I just read an article today that they believe about half of the retailers in China could fail in the next 6 months because they don't have enough cash flow to stay open. That's a really big number. And mind you, China is just starting to come out of all of this. By the way, China, if you believe their numbers, has said that they have no new cases of coronavirus. I also showed you a chart yesterday how after 30 days, once you've had the first 100 cases identified, after 30 days, the coronavirus starts to flatten out where you don't have that many more new cases. So we've got to sit tight for a couple of weeks. Until then, got to keep your swing trading to a minimum. I showed you some swing trades in a video that I released yesterday, sold some out of the money puts naked on stocks like Google. Can you imagine buying Google at $645? And if you're not able to buy it at a 50% discount from today's price, then you get to make a 5% return in the next month. Where are you going to get a 5% return with zero interest rate policy? Man, annualize that, and that's a 60% return. Well, we're not going to have that kind of opportunity for very long because you're seeing option implied volatilities start to come in, and they're starting to come in pretty hard. So you can see this is the VXX, and you can see how it sold off dramatically all day yesterday. You can see how it was down initially today with this market drop. We're getting a little bit of a bounce in it, but I think VXX is going to start rolling over and we're going to start seeing option implied volatilities come in. So that means that step one, once the market has found support, is going to be engaging in selling strategies, selling out of the money premium. For those of you who have cash on the sidelines, who are swing traders, you're going to want to start deploying some of that cash, trying to buy the strongest stocks by selling out of the money puts and generating some income. So we're all over that. That's what was in the weekly video. You can see how that support level was just breached, and you can see how the market is continuing to decline here. So this is not a buying opportunity. This means that we sit on the sidelines and we wait for market support. Now, I am noticing on the short side that it's a lot harder to make money on the short side because a lot of these stocks have been pounded so drastically in the course of the last month that there's a bid, and you have to be very careful because the market is starting to bounce pretty violently. And so when you get short, you get these big short covering rallies, and it's hard to keep that short position. I am preferring to trade from the long side, and I'm seeing a lot of rotation. I do want to talk about SPY a little bit. You can see these long candles in here. Everybody wants to trade the SPY, the ES, minis, micros. I just want to trade the futures. Why would you want to go and compete with the largest institutions in the world when you're a small time trader? You don't need to. That's what I call a thick market. There's no edge to it because institutions are hedging themselves. They're in, they're out. Look at the type of volatility that you get. And this is only going to increase as the market transitions from a strong downtrend to probably more of a trading range over the course of the next week, 2 weeks, 3 weeks. And then you start getting very long candles, Lots of two-sided action, meaning sell, 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 big long red candles, and then buy, 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 big green candles. When you have a 30.5-minute S&P move, you can't trade that. There's no way unless you're trading a one lot of micros or something and you don't mind, you're just in it for the long haul and trying to take advantage of a longer term intraday move. But even that's just not effective. You want to trade the stock. That's where we have our edge. Relative strength, relative weakness. You hear me preach about it all the dang time. That's where you need to be if you're a small trader. We're all small traders. Even if you're trading 5,000 shares, 10,000 shares of stock, you're still small time. Institutions aren't going to mess with stock. They don't day trade stock. There's not enough money to be made in it for them to even bother with it. When they're trading stock, they're looking at reallocating over the course of the next 6 months, 8 months, 10 months. As they have those allocation models trigger, then we can follow those breadcrumbs. And that's why this strategy is so effective on a day trading basis. We're trying to ride their coattails. So, done a little bit of lecturing here. Let's talk about how we can find some opportunities today where I see the market going. I think we're going to continue to see very, very choppy trading. This is quadruple witching. You can see some long tails under body here on the SPY, and you can see how support is starting to form a little bit. This is not a huge bona fide sign of support here. If we zoom out, we can go into the weekly chart and you can see here that this SPY 235 level does have some support that dates back to December 2018. Long time. It's a very long time, almost 18 months, year and a half, but that is a support level for right now. Look at those long red candles. This alone tells you that this is not going to be zoom off to the races. If this Z-Pack hydroxychloroquine combo ends up being a game changer, okay, yeah, then maybe we get back up to the 300 level pretty quickly, but I still don't see us zoom racing up to the high. No way. There is a huge economic aftermath that has to be dealt with. You have industries like airlines and hotels and cruise lines, restaurants that are all going to be needing bailout packages. They need time to heal. This is going to impact earnings for a very long time to come. So there is no quick fix to this, even though the virus could subside. So I think we get some nice bounces on any kind of big news like that, maybe even up to the 300 level, but I still think we're going to have lots of downside aftershocks. Going to be good volatility to trade on a day trading basis, swing trading basis. Going to need to be careful, going to be needing to focus on selling strategies and start trying to deploy some of that cash and start trying to accumulate some of these really, really strong stocks. That's what I'm going to be highlighting each week in my weekly swing trading video that I release to members on Wednesday nights. So let's take a look and let's find some relative strength. I'm going to show you how easy this is. First, we're going to go back to that 5-minute chart so we can watch it through the corner of our eye. I like to have it running at all times so that I can always compare what the market's doing. Let's go flip some charts. Let's go into Bull Run is one of my favorites, and we're going to go right up to the top, and we're just going to go into a 5-minute chart. I'm not going to worry too much about the daily chart right now, but I'm just going to go through and we'll take a look at some relative strength. If the orange line is above 0, that's an indication of relative strength. And here you can see this is a pro share, so we don't want to do any ETFs. We want to look for individual stocks, not ETFs. That's another ETF, so we're going to keep going down. All the contra ETFs are currently showing strength. Now, finally, we're going to get to a stock in here and got to go pretty low. Actually, all the top stocks in here were ETFs. I will find one though, and it won't take me that long. Typically, you see a lot of stocks up in here. So right now, we just happen to be very loaded up with ETFs. If you like trading ETFs, the search will work. So coming down here to ADVM, and I don't know a lot of these stocks, and I don't really care what they are. We just updated, so let's take another fresh look at what we've got loaded up here. I'm going to go down to a stock like Urban. I know that's a stock. And we'll go into the 5-minute chart. You can see, here's what the stock has done recently. Here's what the S&P 500 has done. Relative strength. You can see the relative strength right there. It's a little bit choppy, but it does have some buyers and it's got some strength. So we would be bidding for a stock like this when the market tells us that support has been established. VST, Vista Energy Corp, you can see pretty choppy. It hasn't really gone anywhere so far. Now I put together a list before I started recording, and I'm going to show you some stocks that were on the list a little bit earlier. Relative Strength 30, this is a great list. CLX has been good. Look at that. You're starting to get it bouncing off of this low right here. Market going down, stock starting to bounce. This is definitely one that I would be buying. You can note the time right now. We are 3 hours into the open. CLX is trading at 179.25. You watch this stock on a market bounce. This stock is going to be trading much higher. I like it. They also produce bleach, which everybody needs bleach. GNRC. You can see the stock has been kind of waffling around in here while the market is sold off hard. It's holding its own. This is a stock that wants to move higher. RH, not too crazy about that chart. And I'm looking for nice tight patterns. PXD, that looks really good. I really like that. It's trying to get through the high of the day right here. PXD, really good one. See how easy this is? CXO, let's take a look at that. Look at that. It's compressing right there, market down, stock creeping higher. These are the stocks that we want to buy. When do we want to buy them? We want to buy them when the market shows us some support. So I'd like to see we've got a new low of the day, like to see a market rally, like to see us form a higher low double bottom and then start to climb higher. We'll also be watching for my 10P indicator on the SPY to be crossing positive, which it almost is right now out of a deep trough. That's how we time these reversals and we look for these stocks. CXO looks good. Now here are some stocks that I saw earlier today that I'm going to highlight. Just going to put up FIVE to see what's going on there. Look at this little cup and handle formation here, trying to get through the top of that range. Nice upward sloping trend line while the market's down. FIVE. Well, what do you do with that? Gee, Pete, yeah, that looks good. But you know, I'd really like it if it got up through this point right here. So would I. Click alert, double click on that bar. Boom, alert line drawn. 10 minutes from now, I could get a pop-up alert in the middle of the screen that goes, FIVE, buy me. Okay, that's how you do it. So we'll take a look at CLX. We'll do the same thing. Where do I want to buy CLX? Well, now I got this nice high candle here. So let's see if we can get through back through this high. Boom. There's my alert line. I'm going to go and look at PXD. That one could get through very, very quickly. I may have to zoom out a little bit on that one, or we'll be getting an alert very, very quickly. I like PXD right here, right now. I would buy that stock right now. I'd be keeping an eye on it, and I'd be hawking the market for a little bit of strength, and then I would be in on it. So, going to go into another stock that I saw earlier, LEA, Lear Company. This has been super strong. You can see it's been able to hold the gains for the most part while the market's been pulling back. That's a nice stock. STOR was strong before I started the video. That's still compressing near the high. Still looks good. TRMB really looked good this morning. And it's still compressing. You can see I've got a buy stop on it right there. That's the green line. How do we trade stocks anyway? Let's say that I see something I really like. I'm going to cancel that buy stop. I want to buy this stock and I want to buy it down on the bottom of this compression. Boom, it's that easy. I really like this stock. I want to buy it on a breakout. That's how we do it. That's a buy stop order, instantly placed. It's already working right now. So once we enter the stock, we just click sell, drop the line higher, whatever your target profit is, move on to the next one. Has to be fast, has to be easy. We do that in Option Stalker because we have interfaces with major brokerage firms. Ameritrade, Interactive Brokers, Tradier. So let's keep taking a look at other stocks that I liked earlier, see if they're still showing relative strength. That's our shopping list. MOS looked really good. Let's look at that D1. All the charts are going to look like this, but you've got a big long red candle that has been erased and we're above that opening price. Looks good to me. I think that stock continues to want to go. Final stock pick, ZTS. ZTS looked good earlier today. Let's see if it's still giving us something to look at. Nope. Faltered very, very quickly. So would I be interested in it? Not after a move like that. Otherwise, I would have dropped a horizontal alert line right in here. So that's how we do it. Here's what you need to watch for. Right now, we're 3 hours into trading. We need to watch for, we've got a low. We have a little bit of a hammer here. We got a long green candle that tells us that there is some support in here. We'd like to see a test of that low and a higher low, and then some green bars that show us that we're starting to rally again. I would use this support level right here, which was the prior low of the day, and it comes in right around that 237.50 level approximately. I would like to see us get above that with a double bottom higher low and a crossover on 10p. And if that happens, then I'm going to be looking to buy stocks like TRMB, PXD, and some of the others that I mentioned to you, because those stocks want to run. They have relative strength. If I happen to get into those stocks and the market throws me a curveball and there's another leg lower, they are going to hold up extremely well. I might be able to take small profits on them, but I'm not going to get buried by them. I'm going to have time to evaluate, and then I can exit the trade, maybe take a small loss on it. But if you were wrong on the SPY and we had another leg lower, you would lose money on that for sure. Relative strength, relative weakness, that's our edge. We're small-time traders. We don't need to compete trading S&P 500 E-minis, especially not when we're getting chop like this and monster long tails. The market is going to be transitioning. I traded S&P 500 during the day on the way down for the last month. We had nice long sustained intraday moves. That will not be the case any longer. The market is transitioning. You need to transition. If you're a day trader, go to stocks, trade stocks intraday, not options. Bid-ask spreads outrageously wide. Option implied volatility is decreasing. You need to trade stocks. If you're a swing trader, look for really, really strong stocks. Start lining up your candidates. Be ready to sell way out of the money. Naked puts, way, way out of the money. Take advantage of that extreme implied volatility. As the market finds support in here, you're going to generate some awesome income. Thanks so much for waiting or for watching. We will see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.